Hello and welcome to our weekly wrap. This week has seen the more interesting events weighted towards the back end of the week, with yesterday seeing the Bank of England Super Thursday and today's US non-farm payrolls report. In terms of what we saw from the Bank of England, they kept rates on hold as expected. However, there was immediate weakness in sterling, and this came on the back of the 8-1 decision to keep rates on hold against hiking them. So McAfee was the only dissenter wanting to hike rates, with the likes of Will, Miles and Forbes all deciding that another month of rates on hold was still the right decision. We also saw the quarterly inflation report, and this suggested that GDP is going to be positive. However, we did see the MPC suggest that energy prices will continue to weigh on CPI until the middle of 2016. Elsewhere today, we saw US non-farm payrolls report. It came in at 215,000 against an expected 225,000, therefore lower than expected. However, it was higher than this week's ADP and was also above the 200,000 benchmark, which some consider important to the FOMC. So we did see an immediate spike higher in T-notes. This was on the number being worse than expected. However, this paired and then there was weakness in T-notes, while the dollar strengthened as a rate hike in September is not off the table. So for the next few weeks, we will see the continued data dependency, and we'll see the market focus on data, with next week seeing both retail sales and industrial production out of the US, while highlights from the Eurozone include Eurozone GDP and German ZEW. That's all from me. I hope you have a great weekend.